Hello and welcome. You're watching Your Trades on ET Now with me, Snehisha, and with me, as always, is Priyanka. And Priyanka, well, yet another somber day of trade coming in for us. Tepid trading day coming in, and we were expected to open slightly higher in the morning today. We've opened below where the street was expecting, where the GIFT Nifty reflected in the morning, in fact. And tepid trade on D Street because you have Nifty that has ended below that 24,800 level coming in. Over the course of the day, we did see some recovery coming in on Nifty, but nonetheless we've ended on a somber note, and 24,781, a 0.3% cut on the Nifty is what we've seen. Sensex in fact has ended rather flat. It added some steam to that momentum because you have Sensex that's closed above that 81,150 mark as well. 81,151 is where Sensex is at, rather flat, but just a slight negative pressure on that front. Nifty Bank, however, 0.2% lower is where Nifty Bank was, and you had the likes of Bajaj Auto, HDFC Bank, Asian Paints that helped the Nifty move slightly in trade today, but what completely weighed down on the Nifty today was Tata Consumer on the back of a rather mixed set of numbers coming in, but very bearish brokerage notes. You have Kotak Bank, also poor set of numbers. Bajaj Finserv, remember Bajaj Finserv is an earnings that we were expecting to come in trade just a couple of days ahead, so that stock was in pressure today. BPCL, IndusInd Bank, ONGC, all of these stocks have weighed on the Nifty today. But let's quickly take a look at some sectoral gainers and losers. Before that, also key to note is today there was no show of strength coming in from the broader markets. In fact, the mid cap and the small cap indices both have deeply underperformed what the benchmarks have done. A 1.5% cut coming in on both of those indices. Very quickly taking a look at some of the sectoral gainers and losers today. Auto, the only sector in the green. You have Nifty Metal, Realty, IT, FMCG, PSU Bank, Pharma, Energy. All of these sectors have ended the day in the red as well. Some of the key buzzers in today's trading session, you had Tata Consumer on the back of weak set of numbers, poor brokerage notes. India Mart also very weak set of numbers coming in and rather tepid brokerage notes coming in. And also RBL Bank, you had another weak set of numbers, and also brokerage notes have maintained a sell rating. You had Investec that came out with a rather bearish one, so all of these stocks were deeply under pressure today.
Absolutely. Just to mark few more, good afternoon, Snehi. Just to mark a few more counters. In fact, you spoke about Tata Consumer. FMCG has been posting slightly on the bearish, on the disappointing side only. But if you look at India Marts, that one stock, there was a rise in profit also, and even the EBIT margin. What went wrong, the brokerages also had to downgrade the stock, and the stock was hammered badly today. 17% cut coming in because a trend which exhibits that the growth is slowing down, that is actually causing worry and making participants jittery about it. Tata Chemical, of course, that the Tata Sons mandatory IPO listing. Tata Chemical stands to be benefited the most out of the four stocks that own stake in Tata Sons. That's what came in 10% of gain what we saw on Tata Chemicals. And of course, let's not forget now a lot of action which has to come from primary market. Hyundai IPO which is listing tomorrow. Let's not forget that the issue also saw a lukewarm response, at least from the retail side. That was at the last that QIB and the HNI that came to rescue. But then let's see how this one lists tomorrow, as well as Bari Energies. That is open for subscription today. The day one marking the first day of the issue opening up, and saw a robust response from the retail. In fact, in just in hours only, retail quota was pulled more than 100%. So that's what a lot of action. But what surprised Snehi, that metal space completely, it completely ignored the news, positive set of news which came in from China. Generally when prime lending rates, when they're reduced to, of course, they're stimulating their economy. That has a positive impact on Indian metal sector. Seems like market is completely under the broadened sentiment is still under a pressure, and that's because of the persistent foreign fund selling. What we have seen, October itself has seen a staggering $8.4 billion of selling so far, and that's what is creating so much of panic among the markets that it is ignoring the positive set of news also. Now let's understand, what do we make of the levels that we have closed below 24,800. Shivangi Sarda joins in to help us with the technical expertise on this. Shivangi, welcome to Your Trades. Help us understand now, last week, the kind of sharp recovery we saw on Nifty, Bank Nifty. And let's not forget that today, if HDFC Bank was also would have not done that heavy lifting, what kind of cut we would have expected on Bank Nifty? Tell us, where do you see the index going forward now, both Nifty as well as Bank Nifty?
Good afternoon, Priyanka and Snehi. Thank you so much for having me. So we've seen that, Yesterday's session or the previous session was merely a dead cat bounce, and we've seen that the index is now again into the bear's trap. Now, the concerns, of course, are global, but the dent is, of course, personal. But overall, we've seen that there has been a lot of addition in the call writer's position. So clearly, it indicates that upside will remain capped for a few more weeks to come. Now we are hovering near the 50 daily exponential moving average, but we are struggling to hold above 25,000 marks, which is a key concern here. So there will be some more, dent over here. But the dent is also limited to 24,500 odd level. So that will be a crucial support to watch out for. Upside, of course, 25,000 is the next immediate hurdle. And then we could see 25,350 as the next hurdle that will act out for Nifty. But overall, if we talk about, this week's expiry or the next week to come, we are expecting some sort of a range bound move. Now, the reason why we opened positive and we were taken over by the bears is because there was a clear sign of nervousness right from the start of the session. Even after the positive opening, India VIX was not cooling off, and that created a sense of fear in the entire market. Now, there has been some of the heavyweight banking stocks which have helped the index remain afloat, but again, the broader market sentiment have been quite negative, which has brought down the entire market. Now, talking about Bank Nifty over here, this is, comparatively outperforming the entire broader market per se. But of course, only the private heavyweights have been doing the lifting over here. It's come out of its consolidative band of the last 7 to 8 odd trading sessions, but it's important that we hold above 52,000 for us to regain conviction here for again buying at these intraday lows. So 52,000 would be an important level. It'll be like a make or break zone over here for Bank Nifty. And if it manages to hold above the same, we could see levels of 53,000 as well. Till tomorrow is day after tomorrow is the Bank Nifty expiry. So some sort of volatility will be there. But of course, the focus will be on the private banks and less on the PSU ones. So support to watch out here would be 51,750.
Okay, thanks for that view coming in, Shivangi. One thing I really like that you said concerns are global, but the dent is personal indeed. Love how you put that. But amid a market like this, Shivangi, where we're seeing some sort of volatility, and we've been hearing all experts say that it's a stock pickers market. So if you had to go stock picking in this market, what are the pockets of value? Where are you seeing these pockets?
Thank you, Snehi. But definitely one of my preferred pick over here would be the exchange-related counters, or for that matter, brokerage counters. Of course, disclaimer, disclosures applied. Now, if we talk about the exchange-related stocks, the amount of demat accounts that have been increasing and the percentage of the entire, population that we are standing on is still very less. So there is a lot of scope of development over here. And of course, people are becoming more aware. So this space is something which will clearly outperform even, despite the market volatility. What I'm liking here is MCX. This stock has consistently performed and respecting the upward sloping channel, from the last 12 months. So we've seen that clear outperformance over here in this stock. Now, of course, there has been, a spike in volume today, even after a flat opening, even after a flat closing, I beg your pardon. So, these volumes will add conviction here, and this stock is getting ready for the next target of 6,900 levels. So, recommending a buy here for the next of 6,900 levels and the stop at 6,500 zones. So now, this is one pick which is looking quite positive. And apart from this, some of the consumption name stocks, like, my focus is on Indian Hotel. Of course, it's cooled off from the opening zones today, and we've seen a sharp sell off today. But again, the striking point over here is that it is taking support at its 50 daily exponential moving average, which is quite crucial for this stock. And we can see some sort of a RSI stabilizing at these levels. So it would be sort of taking this stock at a very good risk reward levels. So we could look at this for around about 710 levels with a support of 665 zones.
In a market like this, of course, not very easy to find out bullish calls, but thanks very much, Shivangi. Indian Hotels and MCX, two trades from Shivani. Thanks very much, Shivangi. Moving on, let's get you a view from Srishti also, who's standing by to make us understand that what are the patterns that she spotted on the technical charts. Two stocks. Srishti, is it a combination, or were you able to find clear-cut bullish calls? What is it?
No, Priyanka, you were just highlighting that in a market like this, it's hard to find some of the bullish calls. So for today, both the counters are on the breakdown side because there's been weakness in the markets and a couple of large cap stocks that we wish to spot on the breakdown side. First up, banking major IndusInd Bank on your charts. Why so? Because the stock has been forming lower tops for itself. And other than that, if we talk about crucial support levels, because back then you must have seen that 1400 was a crucial support for IndusInd Bank. The stock did try to make a comeback from those levels, but it was a failed attempt indeed. And in today's trading session, it did break the support level of 1350 as well, and trading below its key moving averages, and the down move also supported by a short build up on the derivative side. So this is the first stock on the breakdown side. Moving on to an IT major, and that is LTI Mindtree, because it was an earnings candidate as well a couple of days back. And if we talk about today's trading session, then it was indeed a weakness. Why did we actually take this chart? The reason being a formation of a double top on the technical front. You will see that it's a formation. After that, the stock did face a rejection. It was a double top in the recent while as well. The stock did correct and breaking below its 20-day moving average. But for today, it actually broke past its previous day low as well. And the move was also supported by a short build up on the derivative side. So hence, we did thought of highlighting this on another breakdown candidate. So these are the two stocks. Back to you.
Okay, Srishti, IndusInd Bank and LTI Mindtree both unfortunately on the breakdown side. Thank you so much for highlighting that for us and our viewers. But let's shift focus, and in fact, when you talk about the retail space, there's been one stock that's been a buzz and up and away, and I'm talking about Trent. Now, in the last 1 year itself, the stock has more than doubled. Milind Karmarkar, the director and fund manager at Dalal and Broacha Portfolio, believes Trent's growth will continue as long as it continues to innovate. Listen in to his rationale behind this.
When you are looking at these businesses over a longer period of time, like I was just some time back, I was looking at Trent. So from 2002-3 to 2007-8, it went up 10 times. But it was not the greatest stock during that time, because we had Voltas going up 60 times and all the engineering stocks going up 60-70 times. Now 2007 to 2010, it again grew by about 50%. But from 2010 to 2016, it did not go anywhere. It gave a return of CAGR of, if I'm not mistaken, about 8-9%, which was significantly lower than the market. So you have to, so in any business, there is a, if you see, there is a life cycle. So initially, it's initial phase like a startup. Then there is a growth phase. Then people start realizing that, oh, this business is likely to do well. Money starts pouring in case they don't want money. But as long as the business keeps innovating, I think the growth will continue. But of course, it's life cycle. So at a time, it will sort of mature and start delivering big cash flows, but low growth. And then, like most of the FMCG companies, that's what has happened, that they are delivering large cash flows, but less growth. And then for now, that phase can continue for a long period of time. And after that, it's a demise. So I think that is what happens for each business. So nothing different. So ideally, you should be invested when the growth phase is there and continue to hold till you think that the business is mature.
All right, so talking about Trent and his outlook was Milind Karmarkar. We stay for a short break here. When we come back, we get you the action from the derivatives, the stocks that were buzzing in trade, and the key of the brokerage notes. Don't go anywhere.
Hi there, welcome back. You're watching Your Trades on ET now. Let's talk about the big story of the day. And in fact, you had multiple stocks that were taking it on the chin today on the back of a poor set of earnings, plus bearish brokerage notes coming in. But one real loser today that weighed very heavily on the Nifty today was Tata Consumers. Very average set of numbers coming in, but the volume growth is something, and the trajectory of the India business is something that did not do well for the stock. And brokerages have also come out with rather bearish notes coming in. There have been downgrades. There have been target price cuts coming in for this stock, and on the back of that, that stock was lower by almost 7% in today's trade. But speaking of price hike plans, Sunil D'Souza, MD and CEO at Tata Consumer Products, says that they have taken hikes in the salt segment to accommodate cost increases. We spoke to him earlier in the day. Let's go across and listen in.
The reason why we've taken the price hike is we've had a record rainfall in Mithapur, which is where we produce our vacuum evaporated salt. I think the highest rainfall recorded since 1929. And because of that, we had a shortage of brine and therefore needed to buy brine. And therefore, the price hike is more to compensate for the cost increase. I don't think you'll see significant movement on the margin front. On the packaged beverages front, in tea, while costs have gone up 30%, we've taken gradual price increases. Keeping the consumer in mind. Second is keeping competitive dynamics in mind. So that there will be a bit of a margin pressure, but we remain focused on maintaining market share and continuing volume momentum. I wouldn't say it's a price war at play. We have started taking gradual, we've probably taken 30% of the cost we have passed on to consumers. Normally, you wouldn't want to shock the consumer with a very steep pricing at one shot. And therefore, you would see graduated price increases, different across geographies, different across pack prices.
That's the view coming in from the Tata Consumers management. Then let's move on. Kotak Mahindra Bank, that was also another stock which saw deep cuts today, more than 5%, and that was because on the muted set of numbers, and Street was, of course, disappointed on that in this quarter, the quarter which has gone by. Now, the net interest income as well as the PPOP, that was in line with Street estimates. Profit and NIMS were a miss. In fact, the asset quality has also deteriorated on a sequential basis. Let's go and listen in what management had to say on this.
Our NIM continues to be one of the highest in the industry, and our net NPA are still at about 0.43, in fact, at this quarter. So I would not say that they are way away from the industry, but yes, we are right on terms of provisioning. It has increased due to the cards. So as we increase the mix towards a higher yielding assets, so for example, the Standard Chartered portfolio which we will purchase will have a higher NIM, or so that will have some kicker in the earning NIMs. And on the cost of fund is the second part. The cost of fund obviously will get reduced because of the saving account interest rates. So both of these measures going forward will go towards improvement in NIM.
Let's move on from one management to the other, and we also interacted with Dinesh Agarwal today, the founder and CEO of India Mart, where he says he expects double-digit growth in the coming quarters, also guided for 33 to 34% margins in the long term. Let's go across and listen.
I think we will continue to maintain a double-digit growth. I don't think because our ARPU growth has been upwards of 10% in the past many quarters. So I don't think that is a very near-term possibility. But yes, if we are not able to fix the paid subscriber addition in the longer period of time, there could be issues related to that. That this is one of the quarter that we have suddenly had from 15%, 14% to 5% growth rate in collection. So I think we are expecting that to bounce back again to double digits in the coming quarters soon. Why the collection from customers has been coming down from upwards of 20% to lower double digit numbers is probably because of the fact that for the last 5 quarters, now we have been adding net customer addition at a much slower pace of about 2 to 3,000. Whereas in the past, we have been adding about 5,000-6,000 customers. So as soon as we are able to fix the churn in the silver category, and we are able to get back our paying subscriber addition comfortably above 5,000-6,000, that should bring back the growth in the collection from customers as well.
All right, but management commentary also could not lift the sentiment. The stock was stock closed with 17% of loss from where it started in the morning. Moving on, we have Gaurav standing by with a list of stocks that were buzzing in trade. A lot of them on the back of the earnings. Gaurav, what all you have? Please share the list.
Well, yes. Let's begin our list with CG Power. There we saw a weak set of numbers. Net profit declined almost by 8%, while we saw some compression in EBITDA margins of around 300 basis points. As a result, we saw some pressure in this counter. Next, let's talk about Ultratech Cement, because when we talk about revenue, that dipped almost by 13% on a sequential basis. Profitability declined almost by 50%, and when it comes to EBITDA margin, that came to around 20.9%, which was expected to be around 15%. As a result, we saw some pressure in this counter as well. Next, let's talk about Garden Reach Shipbuilding, and the reason why this counter is in focus is that the company received letter of intent from Government of India to supply one acoustic research ship, and the cost of this ship is going to be around 491 crore rupees. This contract is going to get completed in the next 36 months. As a result, we saw some uptick in this counter. Next, let's talk about Oberoi Realty, because company has achieved gross booking value of around 1,348 crore rupees in one of its new project, which is situated in Thane, Maharashtra. As a result, we saw some positive uptick in this counter as well. And lastly, let's also watch out for RBL Bank. We saw a weak set of numbers. Bank's net interest margins declined almost from 5.6% level to 5% levels. We saw some concerns rising on the asset quality, and as a result, Investec has now downgraded the rating to hold and also cut the target price to 230 rupees. We also saw IIFL cut the target price to 195 rupees versus what it was at 210 rupees. As a result, we saw a huge pressure in this counter. The stock was down almost by 14%. So definitely watching out on all these counters on the back of the news flow as well as brokerage note that we have received today.
Absolutely, Gaurav. It feels like brokerage notes have haunted the markets today because all the earnings, anyway, poor set of numbers, and upon that you have had downgrades coming in. So the market has not done pretty well today. But well, on that note, it's a goodbye from Priyanka, me and the team that put this show together. Thanks so much for watching.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.